Right, okay, so market corrections and market impulse moves, right? So that's what we're going to quickly do on this video. So this one, again, isn't going to be too long. It doesn't really need to be, right? So basically what you're looking for is typically an impulse move is a fast move, and a correction is where it takes a long time to come back down, okay? And then you're going to get another impulse move followed by a correction, followed by an impulse move, followed by a correction. Eventually you're going to get equal highs, run and stops, break structure. And what you get there, then you get an impulse move down, correction back up, impulse move down, correction back up, impulse move down, correction back up, right? And that's sort of how you you look. If you're looking on your higher time frames, it's a really good way of understanding of what direction the market's looking to go, okay? So if the impulse is going up, and this is over, I don't know, let's say 20 candles or whatever, typically your correction is going to be a lot more candles. So this could be anywhere, you know, from 30, 40, 50, 60, 100 candles back down into a level, point of interest, and then you're looking for another impulse move, okay, and then you're going to be coming back down again. But when you're looking at your market structure, so as we went on one of the previous videos, we were talking about major market structure. Once you get a major market structure shift, so i.e., let's have a look, if I just do this again right here, so you got a push, a correction. Once you get a major market structure shift again, your correction is going to be this point here, okay? And this is where you're going to get your smaller time frame setups again, okay, like that. And then you've got your smaller market structure. But inside this market structure here on a smaller time frame, you're going to have impulse move, correction, impulse move, correction, impulse move, correction, like that, okay? All the way back down to your point of interest before you actually get another setup and you've got another impulse break structure, and the same thing again, okay? And the same with when you're going bearish, you're going to have a move down, move back up, so that's your correction right here. Okay, then you're going to look for a break of that. That's your impulse move followed by a correction. Level, down here, break structure again, okay, and then you've got your setups again, counter trend setups. And again, this is going to have impulses and corrections inside it again, okay, back up to your point of interest there, right? So that's what it looks like in terms of a drawing. I'll quickly go onto the charts now so we can have a quick look at that, okay? You don't really need to be going into too much detail about this. It becomes quite obvious as we go along. But when we're going into the later part of the course, I'm going to be going through a lot more examples and replay features and things like that, okay? So looking at this then, okay, you have your, we did have a move up here, okay? I'll just draw it with this actually. In terms of this, you got an impulse there, you got a correction here, you got an impulse here, okay, correction there, impulse, okay, and then you start to go into some chop, and then you get an impulse up and back down, okay. But this was really, really choppy, okay. You can see there's no major impulse there. It's just really sort of slow movement, and eventually you get an impulse followed by a correction right there, okay. So there's your correction followed by another impulse, and then you can see your correction again there, then your impulse, then this starts to get choppy again, so you have an impulse down. This is what I was saying on that previous drawing, okay. Once you start to go bearish, you'll start to have impulses down, okay. Correction, impulse, correction, impulse, correction, impulse, correction, okay. And it just goes on and on like that, okay. So when you're looking for, like I said, directional bias is going to be really, really obvious. Eventually you look on your higher time frame, find your impulse, find the point of interest that you're looking at, okay. And then you're going to find an entry point there, smaller time frame structure, and then you're going to be riding the counter trend trade, okay. Now the counter trend trades, they are typically a lot slower moving because obviously you haven't got the volume behind it. It's just going to be a case of riding it right down to the point where you're interested in getting back in, and then you're going to have your point of entry. Once you get your point of interest, you retest at that level, and then you're going to be looking for another setup. And then typically at that point, then the move from here back to this high and above is quite explosive because you've got institutional money coming in behind, pushing that price higher, right? So that is it for this video. I will see you in the next one.